For the community now, it's that time of the year where you need to start thinking about filing your tax return, but there are some changes this year to be aware of. Fred Martinez joins us now with more. Welcome, Fred.
Hi, how are you?
Great to have
Good.
you.
Same
Let's
here.
talk about what's new this year, specifically those delays that some people are going to see, a lot of people.
Yeah, this year on Monday, January the 23rd is when you're going to be able to start electronically filing your returns. But under the PATH Act of 2015 that was signed last year, people will have to wait until February the 15th to get any of the refunds for anything that's involving the earned income tax credit. So, and they also, on their website, they're also saying that they need to watch out and that maybe they won't see the money flow into their account until maybe February the 27th. So the filing deadline for the 1040 returns are going to be on April the 15th. So one of those things also that's for this year was the W-2 and 1099. And what they're trying to do is they're trying to cut down on fraud. So they're requiring the companies to have their 1099s and their W-2s in by January the 31st.
Which is a main reason for that delay. And as you're saying, it's the earned income tax. So that's what's delaying that. And let's just talk about what that is, because there's a lot of people here in the Valley that qualify for that.
Yeah, the earned income credit is a credit that they get every year depending on where their wages are. And for this year, if it's under $53,000 or so, you'll be able to get some earned income credit if you have a maximum of 3 kids. And so that's a large majority of the people here in the Valley. So. And
let's talk about some of the other deductions that people can qualify for to help them,
Sure.
enhance their chances of getting a refund or not owe money to the IRS.
Yes, the IRA deductions are one that they can take. Mortgage interest, property taxes, medical expenses, state and local taxes. There's also under the state and local taxes, they can also take what's called a major purchase. So anytime they have a big purchase that you don't like, a big TV set or something big, you can take that extra deduction on top of the sales tax that you get. You'll get the donations. That's also part of what you can get. So, and then you also can get child tax credits. If your kids are going to daycare, you can also get a deduction for that also.
Perfect. And let's just talk about what people need to make sure they have when they're filing, and then also kind of the pros and cons of doing it on your own and using a tax professional like yourself.
Sure. Most people should bring in their W-2s, 1099s, any form that they're getting from some company that they feel like it should be part of their income tax return, they should bring it in. So, and then, what was your second question? Sorry.
Just kind of the pros and cons. Yeah.
Yeah, I mean, one of the things that you want to do is be able to, when you get with tax professional, it shouldn't be a wham, thank you, ma'am. It should be something that, when you sit down and you're talking to your tax advisor so that he can help you with that, with your income tax return. So you want to make sure you take your time.
Definitely want to do that. All right. Well, thank you so much, Fred, for joining us and providing these helpful tips.